Alright, you're on YouTube and you want to learn how to trade, but you do not know where to start from, isn't it? Then this video has you covered. In this video, I will systematically give you all the topics that you need for you to become an advanced trader and for you not to be confused. More oftentimes than not, many people get confused when they learn about Forex because instead of starting from A to Z, they start from B, then go to K, then get back to M. That is the problem. But in this video, I will systematically tell you what you need to do so that trading should be not confusing but more enjoyable. The first topic that you should focus on, which is very important, is the definition of important terms. You see, every industry has got their own terminology, and Forex too has got its own terminology. There are other things that you learn with time, but there are other things that you need to learn as you start. For example, you need to understand what is Forex. What does Forex stand for? You need to know what are the dynamics behind indices. You need to know what makes the difference between indices and synthetic indices. So there are so many terms that you need to know before you can start. You need to understand them. You need to know what are the commodities. In commodities, that's where we see gold. In Forex, that's where we see currencies. In indices, that's where we see NAS 100. That's where we see US 30. In synthetic indices, that's where we see boom and crash. We see volatility indices. And in the cryptocurrency market, that's where we see Bitcoin, we see Ethereum, and many more. So you need to familiarize yourself with certain basic words like what are quote currencies, base currencies, and all these systematic words. So make sure that you get to know them and you get to define them as you are starting. The second topic that you need to focus on is the three types of analysis. Remember, as Forex traders, we make money by analyzing the markets and by getting it right. So you need to know what is the type of analysis that Forex traders do have. And here, you need to know what is fundamental analysis. You need to go to the technical analysis. You need to know what differentiates the fundamental analysis and the technical analysis. And lastly, you need to understand the sentimental analysis. These are three different types of analysis. So when you get into fundamental analysis, you learn a lot of things. You get to learn about geopolitical events. You get to know about economic calendars. You get to know about the fundamentals that move the market, among which wars, among which GDP, among which interest rate decisions. That's fundamental analysis. So after you're done with that, you need to go now with technical analysis. That's where now you get to analyze the market via the charts, and you get to know a lot of things about technical analysis. You learn about support and resistance, you learn about trend lines, you learn about candlestick formations, and a few things like that. So technical analysis. And the third is the sentimental analysis. So when you focus on that, you then know how you'll be able to make money. And indeed, many traders do combine fundamental analysis and technical analysis. Others are just purely technical analysis, because one thing that is certain is that not every market is moved by fundamental analysis. So this is the reason why others are technical analysts purely. The third topic that you need to focus on, and this is when it gets interesting, you need to understand the charts. When you're a technical analyst or a fundamental analyst, you need to know that everything happens on the charts, because you need to read the price action. So understanding the charts has got more to do with you getting to know how you can read the candlesticks, how you can read the place where the price is written and where the date is written. You need to know the movements of candlesticks, whether they are bearish or they are bullish, and you need also to know where to find the charts. We have examples of MetaTrader 4, we have examples of MetaTrader 5, we have examples of TradingView, and there are many more. Now there is even CTrader, there is SharpTrader, there is NinjaTrader, but the main ones are MetaTrader 4, MetaTrader 5, and TradingView. Now that you have understood charts, you need now to level up and understand candlestick formations, because this is the heart of trading on the charts. you need to understand candlestick formations. Now, candlesticks do show the price in relation with the time. Every candlestick tells a story, and if you are capable of analyzing that and understanding that, you can be able to predict the markets. So understand candlestick formations. So certain candlesticks can be individual, but others can be a formations of multiple candlesticks, and being able to interpret the movements of the candlesticks will allow you to know the future direction of the markets. So this is a place where you find the heart of technical trading. So pay attention to this one, and you are going to have success. So it is indeed very important for you to pay attention to that. As you can see on the screen, there is what we see as a chart, and this chart is where everything gets to be done. That's the place where we get to analyze the market, and that's the place where we get to interpret the market so that we can know the future direction of the market. So interpreting this is what we do for a living. However, I know that this might be difficult for you, but the more you get accustomed to it, the more you understand it, the easier it is going to be with you. So you can see there are candlesticks, but you can also see on the other part, on your right, there is a price, and down there, that's where the date and the time are. Before we get to the next point, I would want you to subscribe to this channel if indeed you found out that this video has been informative to you. So make sure that you subscribe right now so that you do not miss any next video, and that subscribe will mean a lot to us. So now the next point is indeed important also. It is familiarizing yourself with popular indicators. So in the Forex industry, there are what we call indicators. What they do is that they allow a person to easily know whether the market is going to be a buy or a sell based on a specific algorithm. Many do not work, but some do work. But it is very important for you to familiarize yourself with them. The likes of moving averages, the likes of RSI, the likes of Fibonacci, and even the likes of Bollinger Bands. So familiarize yourself with indicators, and they will allow you to get acquainted with the charts, but more importantly, be able to know the bias and the direction of the market. After you familiarize yourself with popular indicators, the next thing that you need to do is to understand the chart patterns. Very, very important. Chart patterns are the bias of the markets. They are very important because they get deeper into determining the bias or the direction of the markets. So in chart patterns, there are the likes of double heads, double bottom. There are the likes of head and shoulders. There are the likes of many more break and retest, fake out, breakout, and all these other things. You need to know them. The patterns determine the bias of the market. So get to learn about them, get to exercise, get to understand chart patterns so that you can be able to get deeper into the bias of the market and also the direction of the market. At this point, you will become confident with the charts. You'll be able to read the markets, you'll be able to analyze the markets, you'll be able to interpret the markets, and indeed you have reached a certain level. But it will not be perfect if you do not get to this last and important point: risk management and position sizing. So when it comes to trading, it is not about how much money you make or how much money you lose. It is not about whether you are right or whether you are wrong. It is also about how much money you make when you are right and how much money you lose when you are wrong. Once you understand this, you are going to be a profitable trader. Because if you do not understand this, that will be your demise, because you can make 7 winning sticks, but only 1 loss can blow away all the money that you have made. And risk management is what allows you to manage your wins and manage your losses, because losses can incur, but how you manage them do matter. And this also happens through position sizing, because when you know how to position size, it will be easier for you to know how to allocate a lot size, how to set a take profit, how to set a stop loss, and how to also set a risk reward ratio. So risk management and position sizing are very important as a trader that wants to be a professional. So once you manage this one, then you are ready to place a trade and expect profitability. So now you can go on YouTube and check all these subjects, all these topics, but to make everything simpler for you, we have made a video that we give to beginners so that they get to learn how to trade Forex, and it is free of charge. So make sure that you contact us and we are going to give you a systematic course for beginners free of charge that has all these topics. So make sure that you contact us and we are going to help you on this matter, and I'm telling you, there is no string attached. This is the end of the video, guys. I would want you, before you leave this, to make sure that you subscribe to this channel so that you can be updated on the latest video. You want to grow in your trading career, we are there to help you, because we have reached where you want to be, and we'll be glad to have you reach there too. So make sure that you subscribe by clicking that subscribe button right now. But until then, let's make sure that we meet again in the next video. Cheers.